Hello, and welcome to the first in a series of information videos intended to help treasurers and members of the Kirk session to feel more able to understand accounts and the associated jargon used by accountants. My name is Jenny Simpson, and I'm the Head of Finance and General Treasurer at the Church of Scotland. During today's session, I'm going to cover an introduction to the series of videos, a look at the detailed year-end requirements and what sort of accounts you need to prepare. We'll also have a look at the various forms of external scrutiny required and who can perform those. And finally, we'll look at the different deadlines for the year-end process. As I said at the start, this is the first in a series of information videos that my colleague Leanne Thompson, the Deputy Treasurer, and I will be delivering. The sessions are intended to start with the basics and progress to more advanced topics specific to the accounts of congregations in the Church of Scotland. We've broken them down into manageable chunks and recorded them so that you can watch them when it suits you and tailor the ones you watch to your particular requirements. We've provided a full list of the videos along with their content on the website. Without further ado, let's have a look at the rules covering the type of year-end accounts which you'll need to prepare. And there are potentially 3 sets of rules and regulations that you may need to be aware of. Firstly, the Charity Accounts Scotland Regulations 2006, which have been updated on a number of occasions now, but set out the basic requirements for Scottish charity accounts and the relevant thresholds. Depending where you fit within those thresholds, there's also FRS 102 and the Charity SORP. FRS 102 is issued by the Financial Reporting Council and sets out the requirements for accounts of all but the very largest entities in the UK. And then you have the Charity SORP, or Statement of Recommended Practice, which interprets FRS 102 for charities and gives guidance on how charities can best apply the rules in FRS 102. The SORP is published by the SORP-making body, which consists of the Charity Commission for England and Wales, OSCR, our charity regulator here in Scotland, and the Charity Commission in Northern Ireland. So, how do you know what you need to do? Well, that depends on your gross receipts for the year. As you can see from the slide, if your gross receipts are less than £250,000, you can prepare a set of receipts and payments accounts and a statement of balances. However, if your gross receipts are more than £250,000, then you have to prepare accounts which show a true and fair view under the accruals accounting basis, which means that they must be prepared in accordance with the SORP. If your income is under the £250,000 limit, you can choose to prepare the more complex accounts, but very few charities do so. We'll cover both types of accounts as well as the accruals accounting basis in future videos. Finally, it's worth noting that the threshold is based on your gross receipts, not your income, which basically means anything that you receive in cash or that goes through your bank account. So if you sell some investments and then reinvest the money, the sale proceeds would count as receipts. Let's move on and look at the requirements for external scrutiny. In Scotland, there are no exemptions. Every charity, regardless of its size, must have its accounts looked at by an independent third party. The slide here sets out the requirement based on your charity's income for the year. If your income is less than £500,000, you require an independent examination, whereas if your income is more than £500,000, you need to have a full audit. An independent examination is a lesser form of scrutiny where the examiner's main task is to ensure that the accounts tie back to and fairly represent the underlying accounting records. The scope of an audit is much wider and more in-depth, and as a result, an auditor must have a high level of professional qualifications and must be regulated by one of the UK accounting bodies. If you're eligible to have an independent examination, you can choose to have a full audit instead, but there will be likely significant cost implications of this because of the far greater detail covered by an audit. If you're thinking of having a voluntary audit, then I'd encourage you to speak to Presbytery or to Leanne or I in 121 first. Moving on to look at who can do your independent examination. And as you can see here, the rules not only depend on your income, but also the type of accounts you're preparing. If your income is less than £250,000 and you've prepared the simpler receipts and payments accounts, then your independent examiner can be someone the charity trustees believe to have the requisite skills and experience to carry out a competent examination of the accounts. So the regulations put the onus on the trustees, the members of the Kirk session, to find someone suitable. If your income is more than £250,000, or if you've prepared the more complex accounts under the charity SORP, then you have to have a professionally qualified independent examiner. And I've set out on the slide who this covers. It's basically anyone who's a member of one of the recognised professional accounting bodies, a member of the Association of Charity Independent Examiners, or the Auditor General for Scotland. Next, I'd like to look at the various deadlines for the year-end accounts, and they can be quite tight. Firstly, you need to have your accounts for the year to the 31st of December prepared, independently examined or audited, signed off by the Kirk session and the examiner or auditor, and submitted to Presbytery for attestation by the following 31st of March. Attestation is a requirement of the Church having designated religious charity status or DRC status with OSCR, the Scottish Charity Regulator. This means that our congregations and presbyteries enjoy a light touch regulation by OSCR because we have policies and procedures in place that mean we're effectively self-regulating. You also need to have completed the schedule of financial statistics on the Church's website and submitted a set of the accounts to 121 by the same date. However, we do understand this is quite challenging, and so we give a little bit of leeway. But if we don't have your accounts by the 30th of June, we may estimate your income for the purpose of assessing your Giving to Grow contributions for the following year. Finally, you need to upload a set of your attested accounts to OSCR and complete their online annual return by the 30th of September each year. I'd like to finish with a couple of final points on the deadlines. Firstly, if the attestation by Presbytery does pick up an issue and they ask for the accounts to be corrected in any way, then you do need to get them reapproved and re-signed by the Kirk session and by the auditor or independent examiner. The dates on the accounts should be updated accordingly. Effectively, the new amended accounts replace the original set. And secondly, if for any reason you won't be able to file your accounts with OSCR within the 9-month deadline, then we suggest that you telephone OSCR and let them know in advance. OSCR will ask you to give them an indication of when the accounts will be ready and will make a note on your file. They do look to remove charities from the register for non-submission of accounts, but hopefully this is avoided if you have communicated with them. I hope today's session has been helpful, and I'd encourage you to have a look at the other videos that are available to see if there's anything else of interest. Thank you.